And we are live, I think. I hope. How's it going, guys? How's it going, Bacon? See you in the comments. Let's go. Let's go. Man, it has been a fun, exciting week of earnings. We had Arista Networks report the other day, and yeah, they did all right. They did all right. I guess the market liked it, up 14%. So they beat on top and bottom line. And let's see which one is that. There we go. They beat on top and bottom line. And I think the market was more bullish on their narrative over the next couple of years because they kind of insinuated that they expect double-digit growth over the next couple of years just from kind of the CSP side of the business. So, especially relating to large companies that are building out for AI. So that was pretty bullish. And then they kind of gave hints into like a transition plan of like how they're going to maintain that growth after that period as well. You kind of had to read between the lines a little bit, but there were some pretty good analyst questions in there. And yeah, I don't know why. I don't know why this quarter analysts seem more, I don't know, bullish on them. I think it was 1 or 2 quarters ago they they dropped a decent amount on earnings, and that was just kind of, I don't know, just didn't seem really needed. That was when they got into the 130s, and it was like right into that buy zone. So that was pretty nice. Let's see. It's live, but your camera is blacked out. Really? Is my camera still blacked out? Well, that would suck. Jeez. Let me see. Bacon, let me know if my camera's still blacked out. I'm back. All right, I'm back. We're good. So, yeah, ANET had a good report. The fun one today, that reported, and Paycom. If you guys remember, I did a live stream with Gondar or Andrew a while ago. We looked at Paycom and is it Pelocity? PCTY, and we were kind of looking through both of them. And at the time, I was kind of like, I don't know, man. These are really expensive. At least Paycom wise. They're good companies with stable revenue. But man, they just had a premium applied to them. So you see like Paycom here was about 45p before earnings today, and they are down 32% after hours. 32%. Oh my God. So yeah, they're I think I had my like really rough valuation on my base case right around like 190 for them, and like below 150 got really interesting for Paycom. And I want to say my base case for Paylocity, assuming, I mean, they're a smaller player and I think they could have more growth. So assuming they had a little bit more growth, I want to say my base for them was around 150. So we might see a pretty good sell-off in Paylocity tomorrow. Oh, look at that. So Paylocity is down 10% after hours. It looks like super low liquidity though, so we'll see what it ends up opening at. And then we got Paycom, and it's down 32% after hours. So, oh man, what a glorious drop! So, and I will show you on my watch list. Pelocity I had at point of interest was 154 for the base and 115 for the bearish. Paycom, my point of interest was about 196 for the base, 145 for the bearish. So Paycom, I'm actually starting to go back and look at more of their calls, try to figure out, is this an opportunity? Is it a trap? Is it a value trap? Maybe not even a value trap because it's expensive right now, right? But yeah, it looks like these might be providing us some opportunities. We'll see what happens. We'll see what happens long term. The narrative on Paycom, from what I listened to and what I gathered on the call after hours, was really that they have this new product. They call it Betty, Beti, and it's the best thing ever. It's amazing. It's also cannibalizing other other products that they have. So basically, it sounds like they're migrating customers to Betty, but because they're migrating customers to their new Betty product, they're basically reducing other revenue sources and reducing the need for a lot of service revenues. So customers aren't using as much, I think, service segment offerings, and it's like, I don't know. So it seems like the product is good, but it also seems like the product might create some internal headwinds for them, at least in the short term, right? If it does work out and it gives them the opportunity to expand into larger markets down in the future, um, maybe this could turn out to be pretty good if the product really is that good. But for now, it seems like most of the savings is going to their customers, and they're not really seeing any type of revenue increase from it because they're mostly focusing their efforts on upselling or selling over to their Betty platform versus cross-selling kind of their old platforms. At least that's what I've gathered. I'm gonna have to look into it more. It's getting interesting. Yeah, if it dig into that 140 area, that would be pretty intriguing. So we can see right now, like, well, let's not go to ANET. Let's go to Paycom, PAC. Dun dun. Let this baby load. All right, so yeah, they're gonna drop a nice amount after this updates tomorrow, assuming they do open in that like 160 area, 160, 170 area that they're trading out after hours right now. So yeah, historically we can see on the 5-year average, like they've traded at a really high premium, and based on both forward earnings, they already started to kind of get that, I would say, like multiple contraction a bit. So they had been coming down into a more recent or more realistic value area, in my opinion. And now this might potentially provide even better value for long-term shareholders, assuming that it plays out in a very specific way. And it would have to play out in the way that they have temporary headwinds because they're migrating people over to Betty, but then Betty opens up their TAM. They're able to get more customers in larger companies. And then as they're building out I would say the larger company customer base of the business, they're able to potentially reduce costs on the lower companies and retain those customers. So, I don't know. We'll see. I see something like that, and it gets me excited because this was one that I was like, yeah, the quality seems pretty good. Same with pelocity. Both of them quality wise, they seem pretty good, but they're just freaking expensive, in my opinion. And this is getting into intriguing levels. So yeah, that was a fun one. Let me know in the comments if you guys are looking at anything that's reported recently. Yeah, Julius. Pacey is dead. it is. Oh man. And I don't know why I laugh about it. Like I probably shouldn't. Like I probably shouldn't, but like when you look at something, you're like, dang, that's really expensive. I don't really want to touch that. Like I could potentially own it eventually at the right price, but it just seems like it's priced to perfection. And then you almost get like a confirmation of like when the market's like sells it off for something that seems relatively, I would say like not worth it, but it's like any little crack, and then you just get these huge re-ratings. I feel like that's kind of what's happening to Paycom right now, and I feel like it's just kind of re-rating into more fair value area. So I don't know. We'll see. We will see. Oh, Fuhat, I see your thing about Cloudflare. Man, cybersecurity. So okay, cybersecurity. there's so many different like segments of cybersecurity that it's really hard, even being somewhat in like the tech industry for me. And like, I don't actually work in cybersecurity, but I do have degrees that are cybersecurity/cybersecurity adjacent. I do have multiple certifications that are cybersecurity/cybersecurity adjacent, but it's hard. Like, I don't know, it's a hard industry for me to really have a ton of confidence in because there's just like so many niche areas. And unless I'm like really working deep within that industry, I don't know. I don't know if I'd have a lot of confidence in the certain companies and what they're offering. Now, long term, I would say like that industry is going to have tailwinds for a long time. Let's Cloudflare. Let's see what happened. Cloudflare. When do they report? Huh. I haven't looked at them in a while. But cybersecurity in general, I think, is going to have pretty massive amount of tailwinds long term. It's just going to be something that's more viewed and the more exposure, like almost the better for them. Like if stuff goes wrong, then a lot of these cybersecurity companies, like there's just gonna be more and more budget and more money dumped into cybersecurity. So, big tech, Alphabet. Actually, Alphabet, so Google, was one that I thought the sell-off after earnings was kind of not really deserved. I thought the narrative was just kind of like overblown on the lack of growth within the CSP division of Google. So I don't know. I'm sitting on my position. I have no intentions to get out of my position for sure. And if anything, I'm probably looking at building this one out a little bit more. Even though it's already like individual stocks wise, like 10% of my portfolio, I think. It's like what 3% of my total portfolio. I can see myself building this out a little bit more if it broke down a little bit further. I think my average on it's like 95 or 98, but I know I didn't honestly think their earnings were all that bad. I didn't dig into them too deep. I think I listened to the earnings call. There's some companies like large tech that I feel like I can get away with not paying as much attention to. Like it's not like some small cap speculative stock that you have to really be on top of. But yeah, Alphabet was pretty good. Or actually, I don't know. The price action I kind of liked because I was like, okay, well maybe this might present an opportunity in the future to add up a little bit more. So what is it? Microsoft almost had the opposite happen. They reported and the market was like, oh my gosh, yeah, they're taking advantage of AI for their Azure cloud services. I still think Microsoft is pretty expensive. I don't know. Like, I don't know. I would love to pick up Microsoft. I was so close to pulling the trigger back in the low 200s or so, and I didn't. Which hindsight bummer, but oh well. So yeah, I don't know. I'm just gonna keep an eye on Microsoft and see what they do. Amazon, I think, had a pretty good report, right? And they moved up a bit. Yeah, they bounced a bit. So I don't know. Like I feel like there weren't any like large cap tech earnings that really shocked me. It was more just kind of like par for the course. The biggest one that I thought was probably overblown was Alphabet's move down on their earnings. So let's see, what did Meta do? Meta, I think they've been it feels like they've been losing a bit of steam. Yeah, they were really, really strong there for a while, and now they're just kind of ranging sideways. So we'll see if they can break up and out of this. I think Meta is still probably one of the cheapest large cap tech companies on a valuation basis right now. They're not trading at a ridiculous level. I think their operating cash flow yield is like, I don't know, 5-6% right now. So Let's see. Where are they at? What are they at? Dun, dun, dun. Oh yeah, shoot. I mean, their operating cash flow yields at 8.3%. Net income, their bottom line yields range right around probably 3.7 to 4.7%. So they're not like crazy expensive. I still think Meta's probably one of the cheaper large cap techs out there right now. So I wouldn't be surprised if they did in fact you know continue their uptrend to eventually potentially make new highs over the next year or so. Would not shock me at all. So yeah, with that, like Meta, just chilling with my position. Glad I have it. Don't have any plans to sell or buy more or anything like that. The other one, yeah, I don't know how many people saw this today, but the speculative one that I've been looking at that I have a position in is basically back up to my cost basis now. But Shutterstock reported earnings and they beat on bottom and top line, and they guided up, and the narrative was sounding pretty dang good going into 2024. They announced that they made a multi-year deal with Amazon. So Amazon is now a customer of Shutterstock. And if I recall correctly, it was around the thesis that these larger AI tech companies were going to be licensing Shutterstock's stock imaging in order to train generative AI models. So it sounds like Amazon is starting to get in on that as well. And I think I was starting to accumulate a little bit at low 40s and under 40. And then, yeah, so it'll be really interesting to see what type of guidance they give come Q4. So I'm really interested to see what type of guidance they give for 2024 on the Q4 report. That'll be very interesting. And yeah, they should have Giphy ramping up ad revenue. That's ahead of schedule, so that's good, positive sign. Yeah, 2024 is gonna be super interesting year for this one. Super interesting year, and it would have been nice if I would have waited and bought a little bit, or waited for my buys to buy below 35 or so and get the bottom. But I thought it was a decent shot at the current value, and this earnings just kind of played into how I thought the thesis was going to play out. Some analysts were asking questions about various lawsuits that are going on regarding the, let me remove that, regarding certain companies using unlicensed stock photography to train different models. So there's a lot of liability if you're using, I would say, unlicensed content. And I think that's where Shutterstock's really going to start having a pretty good tailwind. Their enterprise revenue surpassed e-commerce for the first time, and their e-commerce revenue for first time in a while is showing signs of like kind of not recovering, but a slowdown in the drop of subs. So it's kind of like feels like it's bottoming them out, and then they have multiple business or like revenue streams that are picking up. So that will be a very, very interesting one to watch. What else did we have? Let's see. So we got Paycom. Oh, Nphase. Ha! I made a video on this, but man, Nphase got destroyed. That was fun. So Nphase got destroyed. It's now trading, I think it's sub 80 now. It was either low 80s or sub 80. So if you look at Nphase, yeah, 79.58. And they've had demand drop off like crazy. Crazy amount of demand drop off. They're now trading around an LTMP of around 20. They're going through a pretty bad cycle. And I said this in the video, and I'll say it again here. Like, I'm really interested to see exactly what Nphase's like customer demand is versus their distributor demand is. And we actually did get a little bit of insight into that. I looked through some of the call transcripts, and so they don't like lay this out in the earnings reports, but they do reference sell-through numbers within. Why is Getty? Okay, we'll talk about that in a second, Fuat. So, but they do reference sell-through numbers, which is basically end customer demand in their earnings calls. So I pulled up some transcripts, looked at that, and it looked like for the last quarter, at least. So the European side, the sell-through decreased around the same rate as the distributor demand. So it wasn't like they reduced any inventory in the European side. On the US side, sell-through was -12 and distributor, I think, was -16. So they should have at least, and I think US accounts for about 63-ish% of their business. So on the US side, at least, they should have had about a 4% shrinking in inventory. At least that's my estimate. That's my guess. So we'll see if inventory gets sold through. We might see a normalization to what end customer demand really is, but I would assume that this Q4 is going to be pretty rough. I'm not expecting anything like a quick turnaround. I think they're kind of sharing the narrative that, Q4 and Q1 is going to be suppressed, and their guidance for Q4 was 303 to 350 million in revenue, I believe, and hopefully 150 million in inventory reduction. So it's possible that we see, even a larger slowdown in demand, and maybe they miss that. I don't know. It could get pretty nasty, but it's starting to finally look like kind of intriguing, assuming that this cycle kind of reverses and we see maybe a normalization of the cycle in, Q3 or so of 2024. So we'll see what happens. I think for me, I think solar is will have longer term tailwinds. That's why I'm interested in this. If you don't have the belief or the thesis that solar is going to have longer term tailwinds, then this is probably just a mess, right? I wouldn't even touch this with a 10-foot pole. So if that's what your thought was. So yeah, we'll see what happens. It's possible, if they have a reversion. I'm kind of looking at 70s and into the 40s now. Slowly just thinking about building out a position, but very, very, very small allocation. But yeah, it's been pretty good. Pretty fun earnings season. So yeah, so Fuhat, why is Getty getting crushed? Getty is getting absolutely destroyed. And I did look into Getty. And if you look at Getty and you look at I think I was looking at search traffic for Getty, looking at traffic trends for Getty, and they definitely are, I believe, getting hit by AI. And they are kind of decreasing their search volumes. Their traffic trends have been decreasing since the AI release. Typically, actually, did they report? Did they? Getty stock. Let's see. Dun dun dun. Jeez. What a horrific chart. Oh my gosh. Whoa. That is spooky. Happy Halloween. Oh my gosh. That is just horrible. When do they report? They report November 14. Okay. Interesting. So the interesting thing with Getty is that their business is pretty cyclical on a yearly basis, just like quarter over quarter. Usually their biggest uptrend is going to be in I think it's like October, right around now, is going to be their biggest uptrend. And if we look at, you can look at Google Analytics. Let me see if I can find this real quick. Google Trends, and what we want to look for. Dun dun. Oh no, gosh, I am sorry. I am thinking of a different company. I'm not thinking of, oh gosh, what am I thinking of? It's not Getty. It's geez. The I cannot think of that about it. It's the it's the company that is for education. A lot of people use it for like studying tests and stuff like that. Because it was similar, not super similar to Shutterstock, but they were getting absolutely hammered uh, because of the AI threat, and I cannot think of it now. Gosh, what is it called? Okay, well, Chegg. Yes, thank you guys. Chegg. Okay, so let's look at Chegg. So now that I said all of that, just forget that it was about Getty at all, right? Um, forget about it. So let's go over here and let's look at Chegg over time, and we're gonna do worldwide because I have been doing some decent expansion worldwide. And let's see here, past day. No, I want to do past 5 years. And you can kind of see that typically they have had decent peaks in this September, October area. And it's kind of been a muted peak recently. Like their demand, even though they've expanded like worldwide and they've been pushing this in international markets, it seems like their demand really dropped off as AI was released early in the year. And I don't even know if it's recovered. If this last spike up during their busy season is, I don't think it's even as high as it was at the beginning of the year. So with Chegg, it definitely seems like Chat GPT is having an actual impact. And going back quickly to Getty, I looked at Getty a little bit. They're just trash financials. Like it just looked horrible. Looked really bad. So I just stopped there. CHGG stock. Whoo! Dang. So did they report? Did they report today? When did they report? Let's see. Dun, dun, dun. Let's see if I'm guessing they reported recently. But yeah, you guys can see kind of their first quarter quarterly report after kind of AI was getting adopted and being used. They absolutely got crushed. And now they're down to a ridiculously low valuation. I mean, they're trading at a PE of 3.9. So it's super cheap, but it's also cheap for a reason. So I wonder if we can go here. CHGG. Holy cow. Oh, that sucks. Oh man. Okay, so that's interesting. So they beat on their top line, but they absolutely got destroyed on their bottom line. Huh. Okay. So CHG. Yes. Oh my lord. Man. Horrible. Absolutely horrible. So income statement. So top line doesn't look like horrible, but it's definitely affecting the bottom line. I know they were working on some new product rollouts, That might be why expenses are higher potentially in this latest Q, and why earnings are lower. But I know just after looking into it, because I kind of looked into Chegg. Dan, what's up, man? Hey, if you want to join, I will send you the link. 1 second. Let me. Oh, can I? Can I do it? Can I do it while I'm live? Oh no, I don't know. I don't know if. Oh, I can. I will send you the link, Dan, in Discord if you'd like to join. No pressure. You don't have to at all. Let's see. Where's Dan at? Where's Dan? Dan the man. There you go, man. Yeah. Artista. Yeah, no, it's not artista. It's artista. No, but I looked into Chegg briefly when I was looking into Shutterstock, seeing like, okay, maybe there's an opportunity in Chegg as well, but I just didn't see with Chegg. Shutterstock was actually getting contracts with the large players that seemed more durable. They seemed like they were actually going to produce something. And then Shutterstock also had a lot of optionality with some of their previous products, their current like core business, but then also the Giphy acquisition. There just seemed like a lot of optionality with Shutterstock, where just one thing going right could make the world of difference for that company. So Snap, dude, nobody's sleeping on Snap, man. Where are they at? Are they destroyed? I don't know. No, it's not Snap. No, not Snapchat. We want Snap on, right? Snap on stock. Snap is sleeping on Snap. That's right. I thought you were talking about Snap on. I hope you're talking about Snap on. Snap on, great company. Valuation isn't even that bad. Yeah, good products, but yeah, just not in my ballpark. Oh, Dan, how's it going? I got my headphone in.
What's going on?
Hey, I got you. How's it going, man?
Good. I can't see your screen on the StreamYard.
Oh no, that's not good. Yeah, I don't know. Maybe you can try hopping off and rejoining, but yeah, it's definitely on mine at least. On both places.
Wait, okay, let me try again.
Okay. McDonald's stock, right? Okay. Did they just report recently? Man, there's so many stocks to keep up with. It's impossible. Beat. They do what they do. Everybody's got to get their Big Macs. Nice. Ooh, they were in a nice downtrend. All right. Can you see now?
I can see on YouTube, not on the stream.
All right, let me try something. We're gonna close up. Oh man. How about now?
Oh, there we go.
You good? Hey. Yeah. Hey. That's what my tech brain troubleshoot.
You're looking at McDonald's? On. Oh my god.
Yeah, I just did. Hey Mark, how's it going?
Fuhat's corrupting everyone. He keeps asking for McDonald's.
He's like, McDonald's. I saw they were in a pretty nice pullback, and then they rallied here recently. So what actually was this even a good pullback? Yeah, almost 20%. Not too shabby. This is McDonald's is a Dan stock, right?
Yes.
It's a Dan stock.
Apparently, it's the original Dan stock.
Like, yeah, bought McDonald's in 1974 with a no.
I think it was $20 the first time I bought it.
Oh my gosh, man.
I remember it was like $19 and I only had to pay 50%, and then they paid the other half. So,
oh my gosh. Because were you an employee?
Yeah.
That's
it was
awesome.
pretty, they pay you $5. I think I was making $5.15 an hour. So only
Dang.
benefit.
And then you kept it all these years? Is that
Not
right?
all of it. I mean, I've
Oh.
sold, I'm not like strong. Like I've sold stocks for like buying my house and cars and stupid shit, but vacation margin. But
Hey, but man, still that's awesome. So are there any companies that interested you that have reported lately?
I was trying to digest Caterpillar a bit.
Oh, Cat. Didn't that drop decently
Yeah.
on the report? Yeah.
So like, yeah, like
Ooh.
I was hoping it would keep going under 200. I mean, it's probably a little bit wishful thinking at this point, but
Dang. Yeah, that's
it's
a
the
nice
same thing
pullback.
with, it doesn't matter if people are afraid of recession with Caterpillar, it goes down.
Yeah.
It doesn't matter what they report because they did pretty well actually, but
Yeah. Dang. Hmm. Yeah, that'd be an interesting one. I mean, I think it's like what Caterpillar, Deere, Tractor Supply Co. Right? Kind of those.
Agco crushed.
Agco, yeah.
I haven't looked yet. That's what I'm gonna look at after this. But I saw fuck, man, they crushed it. That company, at least the last 2 quarters, I think maybe 3 straight quarters, they've crushed earnings every time.
They have a P of 7.
I know.
That
And it's
for
just like
is that
they're
for
just gonna
real?
build that momentum and you're gonna hold it for like 2 years and nothing will happen, and then it's just gonna
Oh
blast
my
off
gosh.
at some
That's
point.
insane. That
But
is insane. Let's
your
see
model's
here.
like too much. Buy more.
Nah, it's like, yeah, it's cheap.
The tricky thing about
Cheap.
valuing it with your model, though, is their margins should improve with the acquisition of Trimble, um,
Mm.
of the software assets of Trimble.
Yeah, it
If they
looks interesting. Like it looks like net income and EBIT are maybe like um I don't know if there's certain things that are happening that are making them higher than
Mhm.
operating cash flow, but
They got up to, I think, a 12% margin, so now they're at John Deere level, which they've
okay.
never been to the margins John Deere gets. So it's trending good.
Nice.
But
I mean, hey, my like oh, I don't even need that type of target rate. So if we just do the auto, um, well, the auto DCF says it's a buy, so
oh,
there we go. That's all you need to know. Just kidding.
that's
Oh,
better than most people get
we
online.
are not financial advisors. None of this is financial advice.
You
Disclaimer.
mentioned cybersecurity, so I'm really interested in starting positioning into a cybersecurity ETF after I talked to Andrew about it.
Oh, an ETF. That would be a good way to go, man.
Because
Because
I don't have any ability to pick a winner. And I think the way you've talked to Andrew, I think just the thesis would be the whole industry would just do better. I
yeah,
mean, obviously some would do better than others, but for someone
yeah,
like me, I have no idea who to
yeah.
pick.
You would have massive tailwinds. I think like, hey, just buy Arista Networks. They got a cybersecurity line.
Yeah,
Oh. Dude, I'm like, uh, I'm getting to the point where I'm like, it's kind of getting like expensive, but there's so many potential tailwinds with them that I'm like, just don't touch it. Just don't touch it. They're crushing it. Just hold on and see what the heck happens.
Oh, I'll have to see what ETFs hold them because maybe I can find a cybersecurity that holds them in it too.
I probably not because that's not really their bread and butter. They do have some like software features along with kind of their network designs and network management that allow for um, some type of security. I don't know offerings, but it's not going to be like your endpoint to security or your firewall security stuff like that.
Mhm.
It's more like security based off of like segmentation, and I think they might have a zero trust offering for network segmentation. But um, yeah, man, I this is one where I'm like, uh, gosh, I don't know. They are running a lot, and I'm not gonna buy any. I don't think. But yeah, I don't know. If they got to like 300, it would be hard. Maybe I would take 50% off the table just because like I'm still concerned that this DC spend tailwind is gonna end, and it's just gonna be a brute. Like it's not even gonna be look that bad, but it's gonna be a little bit of cyclicality. They're gonna pull back in their maybe a little bit of revenue decline for a little bit, and then it's gonna pick back up. But I feel like whenever that happens, like we could get freak out moments like like Paycom, right? Where a company reports like 2 quarters or 1 quarter, like 2 quarters of kind of just slowing growth, or maybe just a moderate pullback, and just the market goes, oh my god, this is already priced to perfection, and we get like huge downward moves. But
So my big equipment play is KLA so far.
mhm.
I wish I'd added Lamb Research last year, but it wasn't to be. But KLA, like so far, I'm like all the semis a bit, just one after the other, crush, sales projection down, all that, and then KLA comes out and they beat earnings. They did well,
you
so it's
you
just,
would be
it's so confusing right now because I'm trying to
yeah.
figure if we're at the beginning of a down cycle in semis for the next like maybe year or two.
Oh,
That's the other one
yeah,
I'm
man.
looking at. Is there an ETF that I can play off of that? Where you just pick like you just own like the 30 semi companies in the US and you just
Yeah.
ride them on the downtrend for the next bit of time.
Well, it's almost hard because in that case, some of the ETFs that are really pinpointed at those areas, I feel like they would have like pretty high management fees as well,
Mhm.
right? So like, do you really want to pay the 1%, 1.5% management fee, or maybe you just look at the ETF and say, okay, that's what it is, and then like make a bucket or something, like
So
like
yeah, I don't know.
copy the ETF without owning it.
Some of them are interesting but they're like a market cap weighted ETF of like only 30 companies, like a specific like industry. The problem
Yeah.
is then like it'll be like the top two are like 40% because there's
Mhm.
always like the big 2 or 3 companies. But
Yeah.
yeah, I don't know. It's like if you have to pick a player, there's Nvidia and AMD. AMD is the one I'm more familiar with from my friends, but I don't know.
Yeah. Broadcom. I think we talked about Broadcom before, right?
I
Or
think
were we
so.
talking about something else? Oh my gosh. They
I
have
did own
really
Broadcom until I sold off like a while ago, and I went down to like 16 holdings because it was in SCHD, so I was like, yeah, it's fine.
interesting. Okay, so what I was going to say about Broadcom that you might find this interesting is that the Aristocall, I was listening to the Aristocall and they were just doing their Q&A and talking about chip manufacturers and how they are basically like, putting off their designs of their chips for their networking gear. And they were just raving about Broadcom, like raving about it. So, and that is very, very, very interesting to me because what Arista really, really values is like super high compute rates and transfer rates, and like their goal is to get their latency across their like spine leaf fabrics as low as possible, like as low as possible. So yeah, I mean that their comments on Broadcom alone made me be like, huh, I wonder, I should look into Broadcom, because it seems like from the narrative that Arista was putting out that Broadcom is really kicking ass. Um, so
Interesting.
yeah, I don't know. Might be one to just keep an eye out on. And if we go through a cycle where we get a semi pullback, you know, this might be one to consider if the larger players are all using them still.
Well, that's
What
an
was the other one? The
interesting.
other one was what? Qualcomm, I think, right? Qualcomm is the
Yeah.
one that is like heavy Apple exposure, I guess, right?
Yep. and they're trying to grow into auto. So that's a big risk reward one, I think, because a lot can go wrong with that. And auto sales are not so, like we've seen recently with the pullback of EVs, like depending on auto or chip sales could not be a good move for them.
Yeah. Yeah, we'll see. I mean, even gas powered vehicles are getting heavier and heavier on I would say like compute within the vehicle though, right? So it might not have to be strictly just an EV play, but have you I jumped on your stream for like 30 seconds the other day and then I had to leave. I like jumped on, made a couple comments, and I was like, okay, I gotta go. But have you seen the articles with Toyota's solid state battery stuff?
So today I listened. I'm such a nerd. I listened to the Japanese conference call.
Oh,
They did a press event because they just signed a new solid state deal in Japan with a manufacturer. So I don't know why I'm listening to it in Japanese, reading the captions on my phone while I'm trying to read audits.
Oh my
But it's
god.
kind of interesting. Like there's still problems with the batteries, and they were talking about it actually during the presentation, which was kind of wild. They're getting they're brittle basically.
Yeah.
So they're finding like they get cracks and like cracks develop in the batteries. Like that's kind of what they're trying to overcome with these things.
Yeah.
With these solid core batteries. So that like it's a durability question, I guess, at this point.
Yeah.
But they seem pretty confident, by 2027 or 8.
Yeah.
They're going to figure it out.
And that, like, if they pull that off, man, that's gonna be like that'll be a game changer. Especially if they're able to pull it off. And I think they said it would be production pricing would be like 80% of what's currently available. So like you would get essentially double the capacity for 80% of the cost or something like that.
Yeah, it's like less weight because there's no gel.
Yeah.
So just the fact there's no gel, if people don't know, like a lithium battery, it's like little layers of metal wrapped in some sort of gel. So it's a lithium gel like ion battery. That's why they weigh so much, and that's why they catch fire. So these ion batteries are lighter weight, faster charging, like Jesse said. And they're less lithium intensive, I believe. I think they can there's different variations of the solid state, right?
Yeah.
There's like a nickel version and there's like a sodium So there's a few different ones at play, but they're less lithium intensive.
Did you see some of the specs that they were quoting though, that they think they'll be getting to by, I think it's 2026. It might have been 2028. But they were saying they expect to have a battery pack that would give a vehicle, I think it was 900 miles of range.
I had one article where it said 1,200 kilometers, so maybe it's similar to that.
Yeah, that's probably right. I think it was 800 or 900 miles of range with like a 10 or 15-minute recharge time. It was like, what?
Yeah, I don't know all the science, but just because they don't have those gel layers, it's like direct ion to ion transfer.
Crazy, like crazy quick.
It's not even a matter of like 10 times. It's like 1,000 times faster charging than what we have now.
Yeah,
so
and
the lithium batteries.
Oh, go ahead. I did the calculations on it, and so what I think they're projecting is I think that battery pack would be about 200 kilowatt hours of storage. So 200 kilowatt hours of battery storage with a 10-minute recharge time, like
it's game over. Like that's
like if they do that and they can produce them at 80% of the cost, like they're going to just destroy everything else if they're stable. I mean, I guess it's a lot of ifs, right? But if they pull that off, oh my god, man.
Yeah, the biggest thing I keep seeing is they're fragile. They're fragile batteries, so they're not like they've existed for a while. They've never been used for this application. But hell,
nobody sneezed.
Lithium batteries were developed to be put in power tools, right? They were made to be put in freaking cars and semis and stuff.
What were they originally developed for?
The first, yeah, I'm not sure what the
I think
first.
laptops.
I wonder if NASA was the one developing them
Maybe
for
I don't know.
space. Maybe.
But
Um,
yeah, I mean they've come a long way. Um,
I
the
mean, like
other
in your car,
interesting,
like there's the heating and cooling, right? So like your Tesla heats and
yeah,
cools. So like if you walk by a Tesla, you'll hear the motors going because it's probably heating or cooling the batteries at all times.
yep,
Um, so
yeah.
and the bigger temperature swings, the less the worse your battery performance is going to be over time.
Yeah.
But
Yeah. I have a full EV now that I drive, and it's crazy how much capacity usage comes from just climate control, right? If you're just doing like and not even battery climate control, but like interior cabin climate control. If
oh yeah,
you're like just setting it to like 70 degrees, and I don't know, it's been probably in the 40s or 50s here lately. Yeah, something like that. Um, like 25% of your battery capacity goes towards like cabin heating, right? So it's crazy. It's crazy how much draw the just the cabin heaters and stuff have on the battery. But um I was looking at so I've been digging into Nphase more just because it's getting absolutely destroyed, right? And I know you're not necessarily a huge fan on like EVs or solar clean energy stuff, right? I feel like you're healthily skeptical. Would that be accurate?
if it's like a meme stock, I question it more. I love the science part of this. I have engineer and
Okay.
I have physics teacher friends and engineering friends that
Yeah.
I can bounce
So
some of this ideas off of.
I'm just looking at the industry in general, right? And I started doing some research into like solar. Um, and since I looked probably like 8 years ago, I swear the cost for solar hardware for like a pretty sizable setup has probably gone down by 40-50% in like 7-8 years. Um, I was looking at, and then I think I found one or two articles that kind of like back that up. It was like the average cost like 10 years ago was like 55 or 60,000, and now it's like 23. Um, so I was looking at some different solar hardware, kind of like an all-in-one like inverter for solar plus back to grid plus battery storage plus like 14 kilowatt 15 kilowatt hour battery pack and a huge solar array. And it's crazy how cheap they've gotten, like really surprising, at least just for the hardware, right? And I'm looking at like, I would say lower, not lower quality, but like uh, cheaper sourcing as well, right?
So
But
is their advantage that much? Because all I hear on YouTube is they're like, the Enphase people are like their technology is just superior to everyone else in the business, and um, there's no stopping them. They can
uh,
charge whatever they want. They're leap years ahead of everyone else with, is it micro inverters, right?
yeah, so what I would say from what I've seen is that the advantage that you're going to get with Enphase is you're going to probably have a much more resilient uh, deployment and system. It might not be as advantageous in the short run because you have higher pricing, but in the long run, you should have lower failure rates, and your failure rates should be more isolated to where it actually doesn't like totally take down your entire solar system.
Mhm.
Um, so from like an architecture engineering standpoint, I think they do have a pretty significant like advantage. And I would say if that leads to demand, then they're probably going to be able to scale better. Like I'm not sold on like Enphase is going to be, yeah, I mean, the next big thing or anything like that. But I think they do have a decent amount of advantages. I think from industry's perspective, I think Tesla is definitely probably their biggest threat. From the offerings I've seen with other competitors, I don't really think they, from an architecture standpoint, I don't think they really hold an edge against Nphase too much. So I don't know. We'll see. And Nphase's margins are actually pretty dang impressive. I think their gross margins are up like 46, 47% now. Their bottom line margins have expanded pretty nicely, which was surprising to me that we saw such a huge drop in revenue, yet margins continued to kind of truck along. And I think I understand why that is, but I need to verify my suspicions. So
They had such a huge drop off in sales, but
oh yeah,
it's not
I
the
think
end
it's
of the
gonna
world.
I think it's gonna get worse too. I think Q4 is gonna be horrific. Let's see what Q1's like, but yeah, man, I was pretty surprised, like just for the hardware. And this wasn't Nphase gear. This was just like other gear that I was finding from somewhat reputable but discount retailers, kind of third party gear. I was looking at like a solar system that would have been like around a 14, 15 kilowatt hour battery. A was it an 18 kilowatt hour solar ray inverter, and so that was the amount of solar it could take. I think it was a 10 or 12 kilowatt hour output, and then it had like built in like all in one like battery control and export grid control, plus I think it was like 14.3 kilowatt hours of solar panels. So all of that, right? Basically, you'd have to get the permitting, you have to get the electrical work done, stuff like that. But the hardware itself, I think was like 16 grand total. And that's a pretty dang beefy setup. And then you wrap in federal incentives on that, and that takes it down to like 11, 12 grand, which was way cheaper than what I was thinking. You'd still probably have to spend, a couple grand in permitting and electrical, especially if you have to do panel work. But I was thinking it was still going to be at least mid 20s or low 20s just for the equipment easily.
I have solar
after
panels.
incentives. You do?
Yeah.
Whatever.
I bought the house with it. So
Oh my gosh.
but I love it. I mean, I would have done it myself.
Really?
They're Tesla. They're Tesla panels. So
Tesla panels?
yeah,
There
so
you
they was a
go.
lease. The people before me leased them, so I had to sign over sign the lease. So
Oh, okay. Yeah.
I would have rather bought the system, but
Outright.
yeah.
No, I was looking at it just because like for
I don't
one,
I think they're making a mistake making you get the batteries included, the Tesla system, but I mean, I don't know their thought process. I don't think you need the batteries. I don't think you're going to get I don't see how the batteries would increase the performance of the system.
it really depends. It's so
depends on where you
dependent
live,
on
right?
what you're trying to get out of it.
If you have huge cost variances in the cost of your electricity, maybe, but I don't think it would be every I don't know, to mandate it.
The
But like you
biggest
said, they should be focused on
sell.
just like cost of the system itself at this point, because people borrowing, like you said, 11 grand's a different valuation from like 25, let's say.
Yeah. It really just depends. If you're wanting backup power, then you have to have a battery, right? Like there's no way around it. So if you're like I want to have a generator, like I want almost a generator replacement, that's basically what your battery is in your solar array. It's a generator replacement. There's some markets where I think it does make potentially financial sense for a battery, just because you can do offloading to the grid during certain peak rates. And like if your peak rates are like 60 cents a kilowatt hour and your normal rates are like 10 cents or 15 cents, then it might make sense. But it's just really like cost wise, you're probably only going to need it in several circumstances. If your utility, which some utilities do, kind of have really unfavorable rules for exporting to the grid, then you probably want to use it, right? Because you need to have something to kind of buffer yourself while you're storing that energy. But so I think it really just depends. But just how cheap stuff's starting to get, I'm like, if it had a 50% reduction in 10 years, and if it halves again in the next 10 years, then it starts getting really interesting, right? Because then it's like, well, is there much downside to it? So
I
yeah,
mean, my utility bill is probably half my neighbors. So I've kind of, roundabout asked my neighbors what they pay. So I'm paying like half of what they're paying.
Yeah.
Basically everything's electrical except my furnace is still a normal natural gas in my oven, but everything else is electric. So eventually I'll get a heat pump because
I was looking at those too.
Once my furnace burns out, I'll get a heat pump, use the credits, and then I'll have the full solar.
Yeah.
Setup.
All I will say is I'm a cheap ass. And when stuff starts to potentially make sense to me, that's when I know that, like, okay, if they get a little bit more improvement on this, then it's going to be a lot easier to sell to a lot of people.
Mhm.
I really think that that's probably going to be the case here. Like if we see another 50% reduction in hardware costs for a solar system over the next 10 years, and you have your standard state inflation across your utilities, like you're getting into a point then where like solar just, it's almost hard to make an argument against it. We'll see if that happens. I don't know if they can get the costs down that low, but it's going to be interesting to watch play out over the next like 5-10 years for sure.
Mhm.
Especially if we continue to get peak metering going to more and more places as we kind of load the grid with more electric demand.
Mhm.
But yeah, hey guys in the comments, let me know if you have any questions or anything like that. We're
I'm
gonna have to
looking
wrap
at
it
like
up here soon.
Nphase's 5-year average for like some of their margins. They're above them. So
Yeah, it's pretty
they're
interesting.
improving that
Like,
profitability over time, which
yeah, it's pretty interesting. They had a huge, like, their gross margins is kind of what I've been paying attention to, and you can kind of see here that they've um obviously their gross margins were kind of downtrending, but they've been expanding pretty well over the last, like, what, 5-6 years.
Mhm.
um and especially since their current CEO came in. I think he came in like 2018 or so. Or maybe I'm wrong. Maybe he was just referencing that time. But their top end margins, their gross margins, have been actually pretty dang stable, and that's what I was really surprised with. With this huge revenue pullback, they saw an uptick in gross margins, and their bottom line margins basically remained flat. And what I've gathered from that is they just have really, really, really good relationships and contracts with their the fabs that are producing their equipment. So basically, it's a very easy pass through. I don't, so they might not be subjected to like totally tanking their margins if they go through a cyclical time, which, if that's the case, that's a huge benefit for how they structure their contracts with their fabs.
Unlike Tesla, you don't have to just obliterate your profitability and keep growing at the expense of everything. Like, it's
Man,
okay.
Tesla,
Like, what they're doing is okay. Like,
what's Tesla at? I think
like
Tesla's
they're
below
playing the
200
long
now,
game, I
right?
think, is what it sounds like with Nphase.
I think so. It's hard to really know if they're going to be the long-term winner, though, you know? Um, I I like how they're structured, right? They don't really have a lot of debt. They have a massive amount of cash. They have really good gross margins, really good bottom line margins. They're still expanding. They're going through a cyclical pullback in the entire industry, which is giving them some massive headwinds. Along with those headwinds, they've got a lot of inventory they have to churn through in order to like normalize their distribution to like end consumer demand. So I'm like, maybe this is actually going to turn out to be a pretty good opportunity. I could see certain things playing out to where it does end up being a really good long-term opportunity, but it could be disgustingly horrible short term.
Yeah. Oh yeah.
Oh yeah. Oh yeah, man. Tesla margins are just getting obliterated. Gross margins from a peak of 30 down to about 17 now. Let's see. Net margins from 17.6 to about 7. Ooh. Oh.
I didn't
That's
really,
rough,
and, like,
man.
I looked more at, like, I think they're
Oh.
gonna give up on the Model S. The whole luxury cars, they're getting killed on, like, their sales for that. So, like, and you can see the Mercedes, BMW, Audis skyrocketing
Yeah.
sales at the same time Model S is tanking. They're not refreshing it. So they've turned from a luxury car company now to, I don't know, like, you'd have to tell me what they are, because I don't know. Are they the oddball company that makes a weird truck? Like,
Maybe.
he's
No,
not doing the normal,
they're a
the
robot company.
refreshes of the
Didn't you
model
know
was
that?
not an
They're a robot company. Didn't you know that? He was like
Oh,
pivoting so hard. He's like, guys, don't think about Cybertruck. Optimus is really where it's at. And I was like, oh
is
my
that what he's
gosh,
pitching now?
dude, yeah. Like,
Because
did you
I
listen
was
to the
like, what's
earnings
his
call?
pitch now? Because the sales numbers aren't there for the cars.
Listen to the earnings call. It's shocking. He's basically like, yeah, Cybertruck is gonna suck. We're gonna have a lot of issues like getting profitable with Cybertruck essentially. He goes on to say that, like, well, you can't expect I think someone was like, hey, are you guys going to resume to 50% growth? And he was like, well, I'll twist it into how I took it. We've already reached economies of scale and 50% growth is not obtainable from here on out. But Optimus looks really cool.
Oh my god.
And then he goes off on Optimus. Like,
I didn't even know that. Oh, I would have gone off on that too, but
dude, like, go listen to the call just for kicks. Listen to the call, and he totally throws essentially the EV growth like under the bus, and is like, yeah, no, we can't expect to grow that much with EVs.
because the
Like, we've
further
already
robotaxis just pitching that. I had clips literally like the last 3 years. He's like, it's coming, it's coming, it's coming. Every year he's like, the next year
no,
robotaxis. So I guess now it's
he
robots and
no, it's totally robots. He was just changing. He was trying to pivot away from the the EV
God.
business and straight into Optimus. Like, oh, we're making a lot of good progress on this. This is gonna be the next big thing, essentially. Like, and then he was like, yeah, no, we can't expect to grow 50% on the car side. That's just not obtainable since we've already hit scale.
The company's a mess. It's a mess.
Like, go listen to it for kicks, man. It's pretty crazy.
They don't even have new cars coming out. Like the refresh stuff he's doing is not enough. You need to have cycles of new cars coming out to excite people. And you can see
it's
it.
so
Their older models are not selling at this point.
it's so stupid. I can't believe they're prioritizing the Cybertruck over like the Model 2.
Mhm.
Like, the Model 2 is supposed to, if they could get the margins, that was going to be like your mass production vehicle. It might just be that economies of scale aren't there yet, and they can't get their costs down enough to make a Model 2 make sense and have like a $20,000, $25,000 offering. But I don't know. I feel like they're just trying to throw distractions around until prices and production costs come down enough so they can actually make a good offering.
So he's got to lower the price
by
of
that
cars.
time. By that time, Toyota's probably already going to be there, right?
So he's got to lower the price of cars because of inflation and people's buying power is down. But they're going to buy a robot for $20,000-$30,000 now.
Yes, exactly.
Okay.
All right, man. Well, I gotta wrap it up because I gotta get going. But hey, it was fun. It was fun chatting with you, and we'll do it again. for sure. Yeah.
Oh yeah.
Of course, if you ever want to come on and talk about some stocks, I'm always down for it. Hey everyone, thank you for joining. Hope you guys enjoyed it, and yeah, we'll catch you in the next one.